Hey everybody, welcome back. Well, end of the month, so we do get some great charts here. Running through them very quickly before we get to a study that I think is really interesting. You can just see from the ES, you just closed at all-time highs. S&P's at all-time highs, end of the month. So we can say whatever we like about the market, but this is exactly what's happening. And it's not just there. If we take a look at the NASDAQ as well, and we can just kind of see these levels. There you are again, closing at 21,000 on NASDAQ futures. So again, it's really hard to say that we're in a situation here where we need to worry or something's broken. We are seeing rotation and we will get into that rotation, but very difficult just from the monthly chart, and we will be getting into the breakdowns of this. But if we just take a look at where we are right now in the grand scheme of things, it's not really that bad. So the idea of, are we going to roll over? Is this bad? The post-election sell? When we just look at these levels very clearly, we can see that we don't really have anything to worry about. And I think this is really important because we keep hearing that we should be concerned what's going to happen going forward. And the bottom line between the NASDAQ and the ES, we can see that this is not an issue. Matter of fact, it's broadening out when we get to it. Look at the IWM. IWM down closing at all-time highs. That's an all-time high close. And it's really us seeing that development of the market. We also heard so much about the fact that we need to be concerned about the bond market. Bonds actually were bought net. And I know that's a surprise for people that they were bought net. Really, we keep hearing about, we're going to get over 450 and everything else. But look, you're literally at the low on the yield, which means they were buying bonds right into the end of the month. So at the end of the day, do we really have to worry about inflation, or is the market concerned about inflation? And the answer is not overly. Take a look at the dollar here on the monthly. Did it really get out of hand? Well, the close on the dollar was no greater than it was if we take a look at 23, 24. We keep hearing about that American exceptionalism and how it's going to rock the dollar and everything's going higher. But when you look at these monthly charts, you have the dollar in line with where it was roughly on the monthly close, roughly a couple of years ago. You have the bond market that's back to 419, IWM's at an all-time high close, NQ futures all-time high close, ES all-time high close. When you zoom out and you look at these monthly charts, it's really hard to look there and say that we have something that we need to worry about or what is the concern. And I really think it's rotation, and we're going to get into three sectors where I think we're seeing that. So what exactly is happening? Well, there's a couple things out there that I think we should talk about. Number one, IGV is just continuing to rip, and we're seeing that, and there's very little to say here. The expanded text software, we're going to get into some of these names in a little bit. We're going to keep this one short and sweet just because of the weekend, but some of these things going on here, I know it's a holiday weekend, so we're just going to get to it. And if we look at some of these things here, it's really hard to look at this and have a problem with it, isn't it? So that's kind of where my head is. We're seeing where the money's going. We take 1 second and just veer off. Clearly, it is not going into what? Semiconductors, as we see them closing here on the monthly. And you come looking across and going, well, that's one of the worst closes that you've had. And you really haven't broken this for all the year. I mean, you really only have one close that's lower, and that's January 24. So on a monthly basis, this is not a great close. But look at where the money's going. Money's going right into KRE. Look at this close of the monthly. You have not been able to get over this March 23 level since we had that great meltdown where we had all the large banking crisis on the regional side and lost a couple regionals. And now look at that close. You're up there in the top 5. It's a big close for that, and it doesn't just stop there. It also goes into XLF that is completely, utterly breaking out here, and now you're pushing higher into all-time highs. Another sector that really looks great is this capital markets. Look how the capital markets is just continuing to rip higher and higher. That's your Apollos and your KKRs. As I stated, we'll go through some of these names, but I really just want to get a showcase of this. So we're also seeing this change in the new highs and the new lows, and this is really important. Now, before we get to it, if we take a look at what's in front of us, this is the NASDAQ new highs, and we can see this 378 level right here, and we can see when this broke out. Now, if we just take a second here and drop a line, and we can see that line right there perfectly. Now, come across to those new highs, and look at where this puts us. The beginning of 2021, really in that level. You haven't seen anything like that, and then we know we went on a tear for about 6 months there. Then you get into 2016, and just look how far back you have to go from 13 to even find anything like this. But where this really matters is when you put it in regards to looking at it with the new lows. So yes, the new highs are important, but are you hitting new lows too? And it's that divergence that matters the most. Let me give you an example of what I mean. If we drop this down here, there's the new lows, 26. What is that telling you? Well, it's just telling you that you're pretty low. And then you can see from when what? From when we had the election on down, and we can make this a little bit bigger, but you'll see why I don't want to in a second. Once that was there, then we tested it, tried again, no more new lows. So while we are seeing this huge move up in new highs, new lows aren't going anywhere. Now just take a look at how that is sitting here. So you're at really a level that is pretty trough. I mean, you're heading back down to those 2021 levels of new lows. And I think that's very important. Now, when you combine this together, what's important is the relationship. And that relationship is telling you right now that you don't have a care in the world. There is not a care in the world here, but it's very hard to see on this graph. If you came down to here and you blow this up, you're going to see that you actually got really low here. Actually lower than you really got in here. Just by a little bit, but you actually got to what you would refer to as almost the zero line, where you were completely, utterly zeroed out. And that actually is a trigger for something, and this doesn't do it justice. There was a study that was done, it's going back to 1961, and I think it's really important to get this because it would explain why you're seeing the sectors move that have been moving. Now, everybody that watches this channel knows that I really like statistics and I like looking at the past going forward. I found this really interesting, so I want to share it. What you're looking at is the spread, and this is the spread between the 52-week highs and the lows on the New York Stock Exchange. So what you're looking at is if you had the highs, New York Stock Exchange 52-week highs, and then you had the lows, you're going to take those, divide them, and you're going to get a spread between them. The zero line is the spread between those two. And then if you're positive, you can see where you're at. If you're negative, you can see where you're at. I don't think you can use this to determine if you're going to go negative or positive, personally. I think it's going to be a little too skewy. But what I do think you can do is look at a basis of area over the course of a year and then say, okay, where are we going to be in a year based upon this happening? And if you go back from 1960, there's a lot of data to support this. Not a ton, but a lot. So take a look at this. Now, once again, just to talk about what exactly we're focusing on, we're going to pay attention to the zero line, and then when we get up to this 14% line, and it is the percentage difference between the highs and lows. Now, one thing I really like about Sediment Trader is they go back this far, and just to be clear, this is not me, this is Sediment Trader, and what we're seeing is the spread over 1961 over, and what they're doing is they're marking all the signal dates. So when I show you the data, you can see where on the chart and the movements that you've seen this. What's interesting about the movements going back, if I just take a look from 11 on, it's pretty fierce. It's not a short, like sideways consolidation kind of thing, and I can't really zoom in on this, but it's just boom, it's on when that clicks in. And I think that's pretty interesting. Now, there are certain sectors that benefit more from this, but before we get into the sectors that benefit the most, let's just take a look at the data. Now, the data is pretty clear from 61 all the way down to 24, where we are now. And when they take these pieces out, you can see that it starts almost immediately. But what I liked about it, when you went into 12 months, there were only two times, 1980 and then 87, in which you were down. Everything else from when this clicks in a year later, 6 months later, it's pretty staggering numbers as far as on a percentage basis. So you're not just averaging it together and coming out with a number. And this is why I like looking at the data, because let's say we had one outlier that skews the whole number. What we're looking for is a percentage. Every time this has happened since 1961, you would say, okay, well, it's happened X amount of times. There were 16 signals. We'd like 30, but we have to take what we get. 30 is statistical significance. So if we look at this, all right, 16 times, 14 it worked, 2 it didn't. Okay, so when you have those kinds of odds, you want them skewed in your favor. And what I thought was interesting about it is, yes, you have outliers like in here where a month later, okay, you're still getting bonked around. So you're still skewed to the upside more than 50% on your worst kind of demarcation timeline. And towards the end of it, 1980 was bad and 87 was bad. Other than that, 14 out of 16 times, this gave you a pretty accurate indication of where you were in a year. And then when we blend those numbers together, which of course is what you want to do, you want to blend it together so that you can kind of get a good sense of it. In other words, you want the data, but at the same time, you want to blend together and say, okay, what are you saying? And what we're going to focus on is just back here. And what it's telling you is the math. It's just 88% of the time, this is going to proceed with a decent result. Now, what I thought was interesting about this was it's not stating that you're going to have these above average results, right? This is pretty historic for the S&P 7%, something along those lines historically from that period of time. But what it is telling you on a percentage basis is that we're going this way. We're going up. So I'm not stating it from the standpoint of like, oh, look at the trajectory, and therefore you buy this. But what it is telling you is that on a percentage basis, anything that skews more than 50% gets my attention. I prefer 30 data points. We don't have that, so I'm going to point out the flaws of it. But I do want to pay attention to it. Because when you skew, then you want to look for inside the skew, meaning when you're skewing one way, you want to look inside the skew and see which way the sectors are leaning. And this gave you some really interesting data on that. We'll get into it right now. So when this kicks in, what we do then is then go through the data and we see, okay, what do we have? Well, it tells you the week later, year later, but what you'll see like right in here, if you take a look at the financial sectors, and bear with me because I'm on the road, so I don't have all my bells and whistles to point this out with my fancy indicators and fancy little arrows. But if you take a look at financials and you come straight across, 17.1%. So what this is telling you is when this indicator kicks in, financials outperform. Now, what you would do with this is go and take a look and go, okay, well, here's the S&P right here in the top. And then you take the S&P and then you overlay it and go, let me get this straight. When this happens, indicators are suggesting that financials will outperform 2-to-1. Okay, got it. And that ties us into the sectors that we've been watching anyway and that we're seeing outperforming. But then what you also want to do is dive into financials and say, well, wait a minute, was it 1 year that outlied this or was it 2 years? What's the percentage probability of hitting that number? And this is where it gets really fascinating. When we dive into it and they break it out on a percentage basis and you go right to the S&P, you get the 88%, you get the same exact outlay that you would look for on the financials. And you're coming in at that 88% level right here. You can even see that 6 months out, you're 94% of the time you're higher. I mean, which tells you that you sell down, in between 6 to not 12 when it doesn't work. But for the next 6 months, you have a 94% chance of that working. What I thought was interesting is industrials did as well, but they don't have the same kind of oomph. The secondary sector that worked was consumer discretionary. And you can see that consumer discretionary, when this happens, actually gets stronger as the year goes on, where financials didn't. But this tells you two things. One, consumer discretionary was pretty good. Let's take a look at that for 1 second. Coming in there right around that 15.6 level, as you can see there, third line down. And then you're going 17.1, 15.7. Okay, and we're not going to talk about healthcare because I think healthcare is going to have a little bit of issues with the current administration, but you could still look at that for a data point. But this 15.6 is pretty interesting too. And then now what you're doing is you're looking into those names. And I do find it interesting that you're coming across here and you're staying at that 88%. Again, healthcare is in there too. It's just not my favorite sector right now, but it's worth pointing out for those that like the healthcare right now. For me, it's really the financials because that's where we're really seeing the flows right now. And this is really solidifying what we're seeing in the market. So as always, I appreciate your comments on this kind of data. It's always interesting how people view it. I think it's significant, specifically when you start diving into the consistency here of what we're seeing on the financial side. Now, one of the core things that happened with this shift is which sectors are moving, which sectors are not. And we can see this really clearly when we use our big sector chart, which has 40 different sectors in it. Now, for our purposes, what we're going to do is I'm going to expand these names over here to just include the most positive. And I want to show you how I did this because a lot of people always ask how I do these things and make certain things bigger or smaller in regards to TradingView. You just go here and change the text. If I drop the text down to 10, you can see how much more will fit on it. And if I just drop it back to 20, you can see how easier that is for all you guys that are on your mobile phone. So, which is crazy to me that you guys watch this on your mobile phones, but there you go, you crazy kids. But anyway, if I look at this, what I'm interested in from the 5th is we know why we have a change in administration. So I usually just drop a demarcation line there to see, okay, where is everybody from that date, up, down. But if we just use that date and get a sense of this, you can see where the money's going. And down here, you can see very slightly where the Qs are. So I'm getting everything above the Qs. And I think that this is pretty interesting because the hot sector is block, which is obviously crypto, which is your MicroStrategies, which is your Coinbase and all those names. And we're going to get to some of those names and some key levels. This video is going to get pretty specific on these names and levels to watch. I do think it's important to understand that KRE, which is regional banks, is really second. And I don't think a lot of people are understanding this. So we're going to talk about KRE, the cloud, IGV's in here twice, XLF, XLY. So financials, but smaller banks are killing XLF. And if we look at XOP, which is oil, that's doing great as well. We also have retail that's doing excellent. So when we start to really look at this, the biggest standout for me is where are semis? And we don't see semis on here at all. And I think that's very important. Semis are actually underperforming and actually net loss since he came into power, or since he was elected. We'll leave it at that. So I think that's really an important thing to take away from this graph. And I would not expect this exuberance on Bitcoin to go on forever. It's going to take one mean tweet, and then that's going to be it. But to think that this is not going to be a theme for the next couple of years, it's going to be a theme. There's no doubt about it. And if you take a look at KRE and how this is playing out, regional banks are going to benefit greatly from this. Cloud stocks have benefited greatly. IGV names are not going anywhere. A matter of fact, when we ran the top 5 sectors out there that performed over the past month, it's crazy to see what they are. And specifically, they're all AI or data center related one way or another. Even on the energy side, it's kind of crazy. So I don't think that theme's going away, but understand that financials are going nowhere but up, and there's subsectors in financials as well. What I've done in this chart is I've dropped in something that really people don't look at because it's more of a subsector in finance. So you're going to have crypto here, your regionals, cloud, and then here you're going to see KCE. And KCE is a subsector of the financial market, which is capital markets. And what I want you to think about is I want you to think about the deal makers, the Apollos of the world, the KKRs. That's really who this is. And if we take a look there, that subsector is in the top 5. Think of Lazard, think of Moelis and Company. Some people would say BlackRock or Blackstone. I would refer to them as asset managers. Not that they don't benefit from the deregulation, but the M&A activity that's going to go on out there is going to be pretty explosive. It was from 2016 to 2020, way above average, and it was way below average under the Biden administration. So the one thing that we know that is going to have a big net move is more mergers and acquisitions and more deregulation, which helps the KCE sector. Let's get into some names. So one of the things I like to do is MarketSmith. And MarketSmith breaks down their sectors by 197. They do industry groups and subsectors. And that can help you identify not only if you said insurance, but where in insurance you're moving, or if you said computer software, but what kind of software. So I find it helpful and I wanted to share it. I run a scan that goes by specific dates. So I look for specificity after an event. As everybody knows, I love the stool, the macro, the fundamental, and the technical. So when I have an event that is macro, I like to see from that date what moved. And what you can see here from these top 5, and that's all I'm going to just get into is the top 5, just so you can see. 1, 2, 3, 4, 5. None of these on the ranking over 3 months were anywhere near where they are now, except for oil and gas royalty trust. But telecom fiber optics went from 107, 3 to 99, 4 to 106, 5 to 32. So you are seeing a massive rotation. And I think that's very important because when you see that, you could go, okay, well, why is that happening? And we know why. Drill, baby, drill. They're expecting deregulation in the telecom space. And then software, because we believe companies, when they get tax breaks, are going to have more money to spend on software and infrastructure. So it's not rocket science why this is happening, but I think it's important just to note that you are seeing shifts. And when we look at the sectors and then move into what I refer to as subsectors or even industry groups, that this is the shift that we're seeing. And I don't think there's much more to really say about it. We could talk about the year-to-date performance. That's not really where we should be focused on here. I'm always focused on, they're looking at, what's the change in the grouping? Yeah, is that of interest? Sure. But really what's of interest is these are the top 5. You can see where we were at the ranks over 3 months. And I think that's a very important distinction because you're seeing rotation of money into these sectors. So for example, now that we've done that, what we're going to do is I just popped in every single top 1 or 2 names that's in that space, and you can chart them. So if you go to something like, let's just go to a 15-minute, and what we'll do is we'll go from November 5th on. And so from that November 5th date, you come in the next day and it's boom, about 15 change. We can see that TPL, which is the top name in the oil space, is up 29%, Spot's up 25%, Oracle's up 8%, and CN is up 8%. So really what you're doing is how I like to do it, and everybody can do it their own way. But really what you're doing is that top-down approach where you're saying, okay, here's the stool. We have a macro change that happened. What are the fundamentals of that change? And then technically, where should we buy these names, right? So what I like to say is, what happened, who's affected by it. So you have what, which is the macro change in election, change in administration, who's really going to be affected by it. And then when do you look at those names? And the technicals always tell you when to get involved, right? You might not like it, but they do tell you that part of it. But they're not going to tell you who you should be looking at. They might. People always say, oh, I just read price. That's great until you have a fundamental change, and then you're still looking at price, and everybody else is looking at something else, and you don't understand you're about ready to get hit over the head with an anvil, not even a hammer. So it's definitely something that you want to pay attention to. You don't have to be a master at it, but you need to know. When we have these, it would identify that, okay, these are places that we'd want to put money. Once you understand that, you're doing that top-down approach. And top-down, for me, is always really good because it just lets you know where the money's flowing. So, and again, top down is always that premise of, okay, we're going to look at it from industry or, index, and then we're going to look at it from sector or industry. But really, index you're starting first, and then you're going to look at the stock that's there. So you might not even say, I want the largest market cap. You might say, I want the fastest grower, the highest revenue growth that's out there right now. And that might get you into different sectors. But that's what a top-down approach looks like when you're using the stool. And it would help you identify these kinds of moves, which is really the premise of what I do on the longer term. A lot of people watch these videos and think that I day trade. Far from it. 25 to 35%, dependent upon the underlying market, where the market is, determines whether I'm short-term or long-term. It changes depending upon the specificity of the market. But this is a great way for people to identify things and find and develop those trends, because once you find a trend, it makes your life a heck of a lot easier. So I hope this was helpful. So when we look at the first sector and some of the names that we're going to follow, they're obviously going to be Bitcoin related, and I think we should just take a second to look at this. I always use Bitcoin with Tether. It doesn't really matter which one you use the one you're comfortable with. What I would suggest is that you have a control bar, and control bars to me are bars that say, okay, this is which way we're going. So when you have something like this that's a breakout, and then you don't pull back, just like you did here on November, and you can see just really how far we've moved since the election. What you're seeing is you're seeing a bar, it's saying, okay, well, that's pretty much it. So when a bar like this happens, what I tend to do is I tend to mark off that opening price, and then I tend to mark off that closing price and just see how it goes. Do I get anything out of that range over the past 3 to 5 days? Now, most people will look at that and say, well, how could you? It hasn't traded 3 to 5 days. What I always do is just take a look at what's actually happening. What's happening is every time you're trying to break here, you're popping back over. Every time you're trying to get through here, you're unable to. Now, what we have is we have that Thanksgiving weekend coming through, which everybody loves talking to their grandmom about how much Bitcoin they have, and Bitcoin's the future. Sometimes you get a pop, sometimes it's the end of the road with it, and you can see that over a couple years. So you go back to here in November, and that was pretty much it. And you can even go back all the way to here in November, and that was pretty much it as well. So, and then you went through 80% corrections. I don't know that you're going through something like that with as much as you're going to have Bitcoin in the news and people are doing things with it. I don't know if you're going to have that kind of volatility. But what I do know is that you're having trouble up here. So I would watch this very closely. The other thing that I thought was pretty interesting, go to an hourly on this and watch the 29th from where you were on the 29th from that Thursday coming into Friday, and you have that half day. Now, if you mark from that half day on and you start looking like, okay, well, here's 12 o'clock, and then you have the 1 o'clock time, if you go to that 1 o'clock close, which is right here, you're not really, let me just mark that so you can see it, you're not really able to stay over that area. And I think that's pretty telling. So when you open up on Sunday and people want to watch this, or on Monday, the one thing that you're going to really want to pay attention to here is these areas. I'd watch them very closely. Are you able to get above this? Are you able to get above this little area here? You're going to want to watch that control bar. But your first level is really going to be, hey, can I even get over Friday's close at the end? Because if not, that kind of tells you what you're setting up for. Now, whether or not you do remains to be seen. Technically speaking, this is pretty perfect because you have a flag, you have a breakout, you've retested that level right here. So in other words, here's your flag, here's your breakout, here's your pullback, and now you're consolidating before your next leg. So that's how it looks. Now, whether that happens or doesn't happen, and we've gone through this and looked at the monthlies when we started this video, we just don't know, right? So what we have to do is just look at the basics and say, okay, well, what are the basics telling us? Well, we broke the 12, we popped right over, and now the 22 is catching up to it, and the 22 is now above that level of 90. So maybe we hold in here, maybe we continue to break back down. So then what I will do is I'll drill into some of these smaller time frames, such as a 15-minute, and go, okay, well, just show me, and I understand, I'll say something in a moment here. This is not on 6.5 hours because it's futures, right? So it's not on the 6.5 hours, but I run it on 6.5 hour blocks anyway with these 3, 5, and 8. And then I would just look at it and go, okay, well, we're below the 5. And then what I'm looking for is, well, what happens when we've broken the 5 in the past? We've had pullbacks. All right, so what I want to be aware of, I prefer them to do this, but what I want and what happens isn't always the case. And you can see that right here. So what we want to do is just say, okay, well, we've broken, we're trying to get back over, we've been fighting those levels. We did turn here, and we are holding the 8, but does this look like something that's really breaking out? And then when we stay on the 15, right, and go to a bear, on the 15, we can see that this resistance is becoming a pickle. Now you flipped over, you have the control bar, but you start to see the resistance in a little bit in here, and we're testing it. Test, fails, test, fails, test through, retest, fails, and then fails again. So you're going to want to watch this 97 level, but let's get into some of these names. There's a couple that I think are really worth paying attention to. We all know the MSTR, and the game has always been for a while, is you're just buying it at the close and then you're selling it post and pre-market. I mean, it's been like clockwork to buy this at the close and sell it post or pre-market over and over and over again. That's going to work until it doesn't work. And I know that's not really prophetic, but that's the way that it is. So what I tend to do with these names, and I find great value in, is just marking those highs and where you were. In other words, where were those highs on those peaks? And if we get rid of the pre and the post for a second, and you just look at where you're at, you can see that we've been constantly rejecting that area. Even on Friday, you were once again rejecting that area. And a lot of people really aren't watching this. And it's something that you certainly have to watch. Now, the easiest trades for me on Friday were just selling calls against stock, because the calls were trading at 2%, meaning 2% of the value of where the stock was for like 4 hours of work. It was crazy. So you had a half a day. So I was just selling calls against the stock, and that's fine. It's an easy way to just make some money. Fridays are usually a very difficult day to trade. People usually get torn up because it's pretty much opposite day. The volume goes away and then it comes in erratically. We're going to talk about a couple names. But if you're just watching this peak, I mean, if you're on the bearish side of this, there's your whole trade. I mean, you can see that over and over again. What I tend to do with these, because they're so volatile, is, oh, here's the peak. Let's look at that peak, right? Here's the peak. Here's your valley. All right, so Tuesday's low, we held. Okay, so we're holding Tuesday's low right in here, and we're able to kind of ride the lightning here a little bit. And what would you say that? You would refer to this as what we call a VWAP pinch. And so once you're in these, now you're trying to get more data on it. I'll show you how I get more data. I take this anchored volume profile and I go to the peak. And I'm more interested in events than time. I can always look at time on the monthly charts, but events are really interesting to me. And I'll tell you why they're interesting. Because when you're charting VWAP or you're charting volume profile, more than moving averages, is you're charting human behavior. And what you're thinking is the average person that's been in since the peak is saying, get me out, right? They're Amityville Horror. I got to go. I got to get out. And so what that is happening here as well is that's becoming this blue line right here. And that blue line is your value area high on this name. And what is that doing? So what I'm trying to do with this video, and you please comment on it, I'm trying to give you the tools that I use that may be helpful to you, right? Tools, they're only good in the hands of the people that use them. I laugh all the time when people say they don't use RSI, there's no value in it, and I use it all day long, right? So it depends on the craftsman, on which tools that you want. Some of these are going to be great for you. Some of them you're going to be like, that's garbage, I don't want. But at least you can look at the tool and make a decision on it, and you can see how I use it. For me, the tools that are the best are the ones that chart human behavior, because then I can understand where all the players are. And if you know where all the players are, you can make a more informed decision. So when you're trying to get through this, right? When I'm trying to get through this on Friday, what I'm doing on all the covered calls that I sold, I'm actually getting out of the covered call side of the trade, right? I would actually close it if I was maxed out on it and just let it come back down, which is what I did here on a partial. And then I held some. But nevertheless, I might do a whole video on the covered call thing, because I find it fascinating that people aren't really aware of how to do it. You're literally making, when you have this kind of volatility in the name, it's crazy what you can make off of like small moves. Anyway. So what do you have here? You have the red line and you have point of control. Are you able to get over point of control or no? Well, now you dive into this and we drop this down a little bit. And what you're noticing is we're losing point of control here. That's not ideal. So what we have is we have a level here where point of control from all the way back here has been dropping. And obviously it's been dropping because it would have started up here, right? And that's not that hard to figure out. That point of control would drop over time because the stock's going lower. So as this drops, you want to be aware of it. But the fact that you're not able to close over point of control, the fact that you've been battling it, that's a pickle. That's definitely something you want to pay attention to. The other thing that I would say they've done a really good job here with this volume profile is this value low area. Look how you just keep hitting it. And what that's telling you is that's the area here from this peak that you don't want to break. Because if you break value lows, it gets pretty ugly. So you have a whole wall here of, let's call it stuff, that should hold. You have your VWAP on the low and you have your value area here. But really the area that you'd want to get over on this is really that 390 area. So let's do one more so you can see how this works. And we'll do coin very similarly. We'll just start on the daily and look at it and go, oh, well, that should be fine. And you have a flag here and I see it and I think you should be okay. But if this gets ugly, you could have a problem. So you can see the test of that area, the bounce. What I don't like with coin, and I think it's worth going over since these are the two really big names, I don't like when you make these highs and you reject and you come all the way back down. I don't like that. And then what I do is I will refer to this as a control bar because this bar has encompassed the majority of these closes except for this one. So you should be able to see that this bar has encompassed all of that right there. And what that tells you, if you just look at it, let's do it this way so that you can actually get a much clearer sense of it. So if I just go here and just go like this, right, and say, well, that's that bar, and that bar is in control. And then you'd go, oh, just like this bar was in control, and I would say, right, it encompassed all this, and then you tried to break out of that control bar, and you got this. Hopefully that makes sense to you. And then I would say, well, not only is that in control, but now over here, we're not getting anywhere over this. So the one thing that I like to do when I see what I refer to as a control bar is I like to measure them. And what I'll do is I'll just drop a pin there. And I know it's not a fib, but what I like to do is take the 50% line and just say, all right, am I closing over that 50% or not? And what we would see here is every single time we're trying to close over that 50%, we're having a hard time. We're not really able to do that, are we? So that would be a demarcation line for me. And then what I would do with it is I would just drop this down to an hourly and look, because one of the things here, I don't have that kind of peak and fall that I had on the other chart, right? So we're just looking for different tools. Again, some tools work great, others do not. But then you take that peak and you see how it falls perfectly with that 50 and you keep rejecting it over and over again. So now we know that that peak and the 50 are the same. Remove that out and then go, okay, well, what else can we ascertain from this, from that peak? Because you want it from the peak. Because why? And the question is why? Right? A lot of people say, well, why do I care about the peak? You care about the peak because that's human behavior. This is where someone bought, said, I knew it was going to go to the moon and I need to buy it because, YOLO. And then they get involved and then all their hopes and dreams are smashed and they're eating Hot Pockets in their mother's basement. So then you come down here, right? And you can see that point of control and VWAP are the same. So now you know that 308.25 is a monster level. You can see how you broke value low already. So this is already telling you that this is pretty weak. And so you could see, what does that mean? A retest of that level down here is probably not unrealistic. You have that, 289 kind of level. That wouldn't surprise someone like yourself because you would be all prepped for it. And then you would know this level down here. And then what you'd probably do is take a look at this particular pattern and say, okay, well, I'm in a range off of this that we've been in since this level. And you'd probably start marking off those levels here and seeing those VWAPs and saying, oh, well, we broke that low VWAP too. And maybe I should look just from what's going on since the day. Oh, okay, so since the day of the election, that's the VWAP that everybody's in off of. And then you come and look at it and go, oh, that's why you're stopping here. Oh, that makes sense. So we're stopping, doing the undercut and holding and holding and holding. My concern with this kind of stuff is, and we're going to clean this off, and you'll remember that 308 level because you can also hit the rewind. But let's just clean it off and just call it what it is. That's the election. They're your people, and this is what you're watching. So when you get into it, you can see that's the election. It wasn't earnings. Earnings were a dumpster fire. And then you go from there, right? So you are testing and you are riding the lightning there, as I refer to it. And you know that your control bar is 50% down. So when you look at this, you're getting a story. And I would use these levels that I just painted for you and watch how this trades next week and see if there's value in these levels. I always tell people, look at the application of this and see if it's something that you find an application with. But there's a couple more names I really want to go over very similarly so that you're a little more prepped for Monday. And I want to tell you what you're also going to face on Monday with the tax moves that you're about to start seeing and how you can look for them. So I think the best use of this time is to run through how I do this so that you can do it yourselves. But if we take a look at something like Apple, I really think we'd be remiss if we just don't talk about what's happening here. And the fact that you have these lows, you do the undercut on earnings in August, and then you do the undercut here, right, over there, and then you do another undercut here, which makes you think it's going lower. And all they're doing is stepping you up. And now finally, we saw this the other day at the end of the day, and I think you need to be watching these end-of-day closes. 20% of the volume is happening at least in the last 10 minutes lately. It's crazy. But you saw this move at 232 out of nowhere the other day, and then from there it was just straight buying all week. Now look at this on a weekly chart and just look at what's going on with Apple. I mean, it's really hard to ignore, and I'm not sure why the push right now. Why we're seeing this kind of push and how it's getting tighter and tighter and tighter. There were a couple of really good articles on their relationship with the Trump administration. I don't know really where they're coming from or why they're talking about it the way that they are, like they're buddies, but it's out there. I'm wondering if that's part of it. If you take a look at this from an hourly perspective, which I think is really how you should be looking at these and then drilling into them on a 15-minute, if we took all this off for a second and just looked at that low right here from August and you just drop a VWAP, that's not where we're going to want that. I'm not going to have time to edit this, so you're just going to have to rock with it. And there it is again, taunting me. So let's just make sure that we get it. I don't know why you won't just give me what I want. Very annoying. Let's just go there. And there we go. And what you're seeing right there is you're seeing that test, flipping that level over and over again. We could go to the previous peak, but you know you're going to be over it. So it's kind of silly to go to that, but you can see how that's tying in directly with those levels. And I think there's something to that. If you did something as simplistic as drop this from here, you're going to see that you're above the point of control. You're above your value high. You actually came back, which is kind of crazy when you see this stuff and you realize how it works. But you look at that value high area and you watch how this held on Friday, pulled right back to that value high area, held, broke out, flagged, and look at what's going on here. Like, this is hard to really ignore. And I'm not suggesting that you should, but when you see this kind of stuff, you want to pay attention to it. And it's really clear that you're holding those levels and you're flagging and you're setting up to break out. I just thought it was really interesting time. If you take a look at this on a monthly. And what also is important to understand is you have a real battle going on here with the next name that we're going to go over. But you see this monthly bar, and this is how you closed on the monthly, and this is what I find fascinating. You have your breakout here. You almost have a dragonfly on a monthly chart. You go sideways, and then this bar completely encompasses that bar. So I have a bullish engulfing on a monthly chart at the top, and I'm closing at all-time highs. This is what I'm talking about when people are looking at these levels and saying, oh, do we look that good? Or maybe I shouldn't buy. This doesn't look good. When you go out and you start realizing like you're flipping these monthly levels, these things can go parabolic. Now, I don't know, again, why it's moving the way it is. We all know it's not Vision Pro. So we have to be cognizant of that. But at the same time, we have to look at it and try to understand it. Now, you have this battle that goes on at the end of every quarter, and that battle obviously is between NVDA and Apple, and we'll explain what the battle is. So really the battle is over market cap near end of close, and the reason for that is the XLK. The XLK rebalances at the end of every single quarter. So what's happening here is they will kick out about 20% of whatever number one is and drop it to like 4. It's kind of crazy. They've been doing it with Microsoft too, but Microsoft's really been holding its range. So one quarter XLK will have like 22% NVIDIA. Then Apple passes it, and then they cut it from 22 to 4%, and then Apple goes from 4 to 22. So you're seeing these big swings, and what's happening is people that are long the XLK as to get exposure are seeing, oh, well, we should be buying Apple because Apple's over on the market cap right now. So they'll buy Apple knowing that you're going to get added to the XLK, right? This could be one of the reasons why it's moving. Whenever Apple's above market cap, you'll see this move. So if you take a look at these movements that happened realistically, what you're seeing is you're seeing between 3.3 to 3.5, 3.35 to 3.55 between Apple and NVIDIA right now. So you have this battle going on, but what will happen is that after this repositioning, then they will sell the leader, whatever got repositioned, because they already have exposure in XLK. So you have to watch it. It took 2 quarters for me to figure out why the dumping after, but that's why they dump it after. But into it, they'll buy it because they know XLK has to buy it. So they're buying into the quarter, and then right after the quarter, they're long XLK. So then they're dumping that leader, and then they're buying the one that got dropped, which would be NVIDIA right now. So understand that. In regards to NVIDIA, I actually like the way it acted here. I always need to see the higher high close over these levels. It's just how I trade. And I did get it on Friday, so it does make me happy. I'm not really interested in always being first on these levels. And I'll just kind of give you an example as why. It's even one of the reasons why I use a 55 over a 50. You crack underneath of it. You look like you're going to go. Hits again, goes, hits again, over, right? I need the close. I don't get it, so I stay away. I get my close over. Sometimes I'll do it, but I really like that higher high to tell me that I can push. So I get my higher high, it pushes. So there's a trade there if I want it, but there's the failure. And again, breaks, there's the close, and then now I know that it's toast. Can't get over the higher high. Maybe I have a shot, I don't, right? Maybe make a little money, but higher high, I'm good. And then I go from there. I like the confirm versus just buying because I'm over. And that's just how I trade. That doesn't mean that that's how you have to trade. I'm just telling you what I do. So when people are watching this, especially in the room, and they're saying, oh, we're over the 55, it's on for them like Donkey Kong. And I get that because you're looking at that and going, okay, well, we're definitely going to hold here. We have the doji. I'll take the risk and I'll lose $4 or $3. You quantify your risk and it's on. I want to make sure you're going to hold. And then the next level really for me is this. When I look at this, I want to make sure that I'm getting above that 5 because right now I have the 8 pointing down. I have the 5 sitting right here and I'm riding that 5 and I'm just getting slapped down. And what I don't like is when they're positioned like this. Now, at the time of recording this, I do have a position in NVIDIA and I'll see how this goes because I'm wondering how Saturday is going to go with tax selling, or Monday rather, with tax selling and how they're going to position themselves. And I don't think they're going to be blowing out of this. As a matter of fact, I think we put in this double bottom pretty nicely down here. And I do think that it has the possibility of holding. You can all see that. I'm sure you already saw it without me. But I want to watch that level. So I tend to drill into these on that 15-minute and just look at them. But if I've got a 5 pointing down like that and I'm hitting it and I can't break it, yeah, I do like the name, so I am biased. But I always watch that stuff and go, okay, well, is this going to be that area of contention right in here? And I'm sure you guys already saw it before I popped it in, but you can see that right here, that close, hitting here a couple times. That becomes the neckline. You can actually say left, head, right, neckline, and then you're unable to break it, the retest before you crack. We'll see how it plays out, but that's kind of where my head is with it. So we'll have to see how this goes. But I think most important for me with this kind of name is to watch those peak levels again. And so what I tend to do here is I start by just dropping a VWAP right there and saying, okay, where are we? Well, that VWAP ties directly in up here, but that puts you really at 140.5. So you're still $2 off from there, tying you into that control bar. So it's not really the end of the world, but overlay it then with like the volume profile from the peak. And I thought this was pretty fascinating because you got right over point of control. So what that's telling you is that pullbacks to 136 or that area, they probably hold because you have this whole basing right in this area. And then you're going to sit right in here. It looks like it's more 137. Let's do this for settings because if I'm having trouble seeing it on this small screen that I'm doing while I'm away trying to blend with the non-trading people for Thanksgiving, what we're doing here is you're watching that level 138, but really you want to see that 136 3/4. And you can see how you're kind of wedged in here in a couple different ways. We could look at this and say, well, what about this VWAP? But that's really going to give us what? Wednesday? It's not really telling us much, is it? You might want to pay attention to it's there, and you might say, well, we're wedged in here, but I really think that 137 level, I really think that's going to be our area of interest. And I don't think that they're going to lean too heavy on this, but that's going to take us into Tesla, because I think that's the other one that you really need to watch here. Now, if you look at this on a daily, I thought this was fascinating. There was no reason to bounce on Friday, like zero. So you have the option hoople heads, and what happened is obviously any gap up on this just traps people, right? Either way, we gapped
up on it, okay, so then all of a sudden we're going to come down. Oh, we're gapping up on the red. Oh, we're going to do this. Like, it's crazy how it works. Like, oh, you closed here. Well, we're going to gap down on you, and then we're just going to crush you. And it's just over and over again how they do it. It's kind of crazy to trade, but it is what it is. No matter how you look at it, you are basing up here, and if you do the simplest of things, you can just see the 12 and you're back over it. Overlay just the 3 right here, and look at what you've done. You've closed back over it, and you're not as broken down as you are on NVIDIA, meaning we don't have them sloping down like they are right here on Tesla. It's kind of the opposite, isn't it? And I think you should be looking at the big dogs right now, because we're going to get into the taxes and what I think you should be focused on. So if we're looking here, right, and we're watching how this is acting, you're holding. So you would go, okay, well, we're holding there. Drop this to an hourly just for a moment and just make this bear, and then look at it and go, okay, well, since that move, do we have a peak that we can't get over? And the answer is no, not really. You really haven't had a peak and then a mark. So in other words, by a mark, meaning MSTR, that big drop, coin that drop, NVIDIA's big drop. What we did was we just held Friday, which really was that peak up here. And then if we go to here, watch, here as well, and you're really just wedged in here, but you really get to that 361 level up here. And I think that's what you have to focus on, because that's really all you have is this bar. And then this is where it gets super interesting to me. You closed over it. You didn't have to do that. You didn't have to close over Monday's high, but you did. And so then what you'd want to do is just look at the value of that and say, was that enough? It's a Friday, so maybe you want to see the next bar, the higher high, and then you're using that as sort of a low. Like if you broke that hourly, you probably aren't going to feel too warm and fuzzy about it, right? But do we really need to go back to here to figure out like where the players are? And this is why it's so important to understand what we're charting when I say we're charting human behavior. Because if we are to look at this, you don't really want to just go off the peaks here, because you really don't have a lot there, right? So in this scenario, I'm going to go off of the election and say, okay, well, where are the players since the election? And I thought this was absolutely fascinating, because it's not really dropping them down here. It's saying this is the average of where everybody is. So then if you look at Tesla from that standpoint, here's the hourly. Not only are you above that, but you're starting to get above that point of control. Remember, point of control is very different than what we're looking at when we're looking at VWAP, volume weighted average price. And this is the price where the majority of people own it. So it's very, very different, right? It's not the same thing. And I find point of control an area of significant interest, because that's where you could have to me, that's where you see the most violent moves when it finally gets over there, because everybody's like, finally, I'm up. I don't need to sell. Means supply goes away. Meaning if they keep hitting it and breaking, people are like, that's it, just get me out, I'll come back to it, right? And then they blend it together with VWAP. But you can see how you're holding that value low, and it's telling you can get to 354 up there and go from there. If you drop it to this on the 15, it doesn't really get any clearer what you're going to want to watch on Monday morning, right? It doesn't really get there, 339, 340 level, and you can go from there. I will say this, if you are trying to get into the community, there are 2 days left for the wait list, so make sure you are on the wait list. The link is in description. I did get some emails over the weekend looking for their invitation, and I'm traveling, so I will just do it Monday, Tuesday. So if you are waiting for it, just look Monday and Tuesday to get on there, and then the community will shut down to sometime in 25, and meaning enrollment will shut down in 25, and we'll go from there. But using this allows us to establish a range and get where we need to get to, early on in the day. That is it. Have a great weekend, everybody.